So now how do you trade divergence? Well, there's two paths of thought that we're going to go down, and one is going to be our focus for this video. The first one that we're going to talk about mostly today is using divergence to keep you from taking a bad trade, to keep you from getting in a potentially trap move, a potential for a trap move. The second thought path that you can go down with divergence is to not only use it to keep you out of a bad trade, but then potentially using that knowledge to flip it and trade the market in the opposite way. Now, that's not for the beginners, and that's not why we're not going to go into that too much here in a few minutes when we go into the examples. This video, we're really talking about just identifying the divergence. What does it mean? What is it telling us? How do I draw it? And then how can I then eventually take that to the next level and start to identify trades using it? So how do you draw it? Well, number one, I've got 4 steps for you. Number one, you start with the RSI as your indicator of choice. Some people will use MACD, some people will use everything. Doesn't matter. I'm telling you, after watching this video, if you're watching this far, give me a thumbs up if you like it so far. But if you're watching this far, switch everything up. Start with the RSI. Then you're going to ask yourself, is the RSI high or low at the same reaction point as price action? If the answer is no, you're going to use the corresponding reaction points between the RSI and price action to draw reaction points and draw trend lines. One trend line on the RSI and one trend line on price action. Once you have those trend lines drawn, you're going to be able to clearly identify if there's divergence or not. How? Like I told you already, if price action is moving one way and the RSI is moving the opposite way, that divergence, that difference, because they're not in agreement, creates divergence. So now bullish divergence is when the indicator is rising and price action is falling. Price is in a downtrend overall. So what does that mean? Price action is moving lower, but the indicator is moving higher. So you use the RSI low versus the price action low to identify that divergence. In this situation, your RSI low will be a different reaction point than your price action low. So as you can see here, the RSI low all the way at the left of the arrow is a different point than the price action low here at the end of the top arrow. Does that make sense? I have a couple other graphics that I'm going to walk you through to show this to you before we get into the examples, but just try to visualize here. Bullish divergence is when the indicator is bullish. The indicator is saying we should be long biased overall, but price action is falling. That's bullish divergence. What does this signal to us? Well, it tells us that a bottom or a slowdown potentially could be coming. So when we're in a trade, if we see this divergence come and we're short and the indicator starts to rise but price action continues to fall, what does that tell us? Maybe we should take some of this trade off. Maybe we should book some profits here because we know the indicator is the one we want to trust and it's starting to go against us. The same way where if it's, not forming divergence, you can anticipate that the trade should continue. This divergence will show you when price action is kind of making money grabs, almost grabs, while strength is not moving in the same direction. So here, let's ask a question. You see now we have price action. Of course, you see my EMAs, but we're not really focused on those right now. We're just looking at the black candles. You have price action, and you have your green RSI as a part of the TDI. That's that green line down here at the bottom, right? So you ask yourself, like I said, step 2, is the RSI low the same point as the price action low? No, in this situation, it's not. You see how the RSI low here was set around 1, 2 in the morning, but the price action low is set at 6 a.m., a little bit after, maybe 6:30. So what does that tell us? From that point on, right here, that second point, when that reaction point is set and it's matched on the TDI and that RSI does not come lower, you see here how the RSI does not come lower? That tells us that this is divergent. So in this situation, how would you react? Well, if you were looking to short this, you would be very hesitant because you know it's already divergent. And in order to trade it short, you'd want the divergence on price action, meaning the trend line on price action, and the trend line on the TDI, both to be broken in order to trade. You will not trade it before it's broken. You'll wait. Because why? What happens? Look at this reversal. Off the divergence. Price continues to drop to grab orders here. The RSI was already telling us from 6 a.m., 7 a.m., 8 a.m. that it was not moving lower. See how the RSI does not make a new low here, but price action does? That's the divergence. Falling. So here, Euro USD on the hour chart here. So these are hour candles. You can see here from the 15th into the 16th, again, over the course of a week, right? This is Thursday into Friday. The RSI sets its low, and price action then on Friday goes and sets another low. So RSI low is here, price action low is here. You see those reaction points, they don't match, right? RSI low is back here, but price action low is not that same point. So what do we have? Divergence. So what do? You use the support and resistance zones that we draw in our system, right? The 2-candle rule to draw your zone, this horizontal box, and you know that you cannot short this until you break the zone and the RSI breaks the trend line. I mean, you guys aren't stupid, so you probably can understand what happens here. RSI never comes down and makes a new low, past the oversold, price action never breaks the zone. Literally, for the advanced guys, like I said, when it comes back to that zone, until it breaks it, you can anticipate that it probably will bounce higher off of it because the divergence is stronger than the price action. The RSI rising is going to push the price action up here in coordination with that rising RSI. Does that make sense? If it doesn't, drop a comment on this video, please. I will email you, I will talk to you, I will make sure you understand. Using a TDI, using an RSI and divergence the way that I just showed you how to do will keep you from getting into trap trades. If your RSI is falling and price action is rising, you're ready to go long, check your divergence. If there's divergence, just wait. Because if you wait and it still presents and it breaks the divergence, you can still make your money. But if you're in early before the divergence on price action and the RSI is broken, you're more likely than not going to get chopped around. Wait for those levels to be broken. They're there for a reason. Now,